Yes, we are back. We are back with another amazing stream. Welcome back, everyone, to this amazing new stream on the channel. It's an absolute pleasure to be here and to share this amazing moment we're gonna experience all together with you guys out there. So, without any further ado, we've got a lot to talk about on today's video because, yes, today is the day that we're for sure at least going to get 25 basis point rate cuts. And of course, we're going to be finding out in 15 minutes. But I mean, I can personally already say it's going to be 25. It's going to be no more, no less, because the Federal Reserve doesn't like to be unpredictable. So they always like to be predictable. So it's going to be 25 basis points rate cuts. But what is going to be very important today, and that is also the reason why I'm currently streaming, and I'm quickly checking if all the sounds are good. I think it is quite good right now here. And of course, let me know in the chat, guys, how you're doing and if the sound is good and everything and the connection is good for you guys out there. But the important thing that is going to be happening today is obviously the dot plot, because the dot plot is basically the prediction of all the Federal Reserve members, and they're going to be giving their statement about where the market is really going to be moving towards. Where the rate cuts are going to be moving towards. Where is going to be basically the right monetary policy in terms of Federal Reserve Fed funds in the coming year. So it's going to be freaking exciting. It's going to be exciting to see what it is going to come at, because that is for sure going to cause a lot of volatility. And of course, I've prepared a lot of amazing charts that I want to share with you guys out there, because for example, this chart shows you every single time we got an FOMC and what Bitcoin has done after we got the FOMC. And for example, I'm going to be running straight away in towards it, because we don't have a lot of time before, of course, the meeting from Jerome Powell is going to get started. And in this meeting, I'm going to talk about what we can expect about that in the stream. So make sure just to continue watching. But basically, I've got a lot of data telling us what has happened in the past. And of course, we could base our opinion on that, what is going to be happening today, of course. And even better, I have got even more trading setups. And I will quickly show you this to you guys out there, because in my VIP Telegram group, I've got a couple traders out there, professional traders, and we shared some very interesting FOMC setups where, of course, potentially a lot of volatility could come towards the market and you could be taking these trades. I am looking at these trades as well. So I'm going to discuss this all on today's stream. It's going to be very, very exciting. But first, let me talk about Bitcoin. And guys, I see 1,200 people already in the stream. Highly appreciate it. Slap on that like button. It is going to be a freaking amazing stream here. So if we look at the last meeting we got here, which was on the 30th of July 2025, after we got that meeting on the day itself, basically, if I go to the 4-hourly time frame to basically show you it a little bit in more detail, we got a slight little dump here, but all in all, nothing really happened. But what we can see in this meeting, and this is of course what I want to be explaining in this video, in this stream real quickly, is that during the FOMC meeting, we usually don't get a lot of crazy price action. You can see that in the last meeting, you can see that in the meeting before that, you can see that in the meeting before that, and basically, if I go back in history, you can just see that in every single meeting. But what all these meetings have in common is that on the day of the meeting itself, we don't see a big move. We don't see usually a major shakeout or a major bump towards the upside. But what we do see is, for example, last time around, in the following days, in the following 12-hourly candles, a big dump here. And if we look at the meeting before that, what we saw over there is also nothing really happening on the FOMC meeting itself. The day after, big dump, then a big pump. So a lot of volatility in the days/hours after the meeting, but not necessarily on the meeting itself. So this is, of course, very important to understand and to have in your baseline of expectations, because sometimes I see people watching these streams and of course they're talking, oh, but nothing is really happening. No, that's because usually nothing really happens. I mean, we do, of course, see some volatility, but it's usually always after the FOMC. Also here in December 2024, it was after the FOMC, like a day after was this, where the big volatility came here. Also over here in November 2024, the day itself, nothing really happened. And then approximately, let me say it correctly, 4 days later, we, of course, did saw a lot of volatility. So yeah, that is, of course, basically in the line of expectations once again today. So I am not necessarily expecting we're going to get crazy price action on the day itself, But of course, what, for example, Jerome Powell is going to be stating on the stream, on his speech, of course, is what is going to be what, of course, is going to be driving the volatility for the next 2 to 3 weeks here. And of course, like I said earlier in the intro, no, you should not be expecting more than 50 basis point rate cuts. You should just be expecting a 25 basis point rate cut because it's basically 93% already priced in. But where the volatility usually comes during these meetings is usually not necessarily, of course, a little bit during the interest rate decision, but mostly during the speech of Jerome Powell, if he's going to be speaking, for example, about QE, quantitative tightening, blah, 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 for example, right? So also, I have this chart not only on Bitcoin, I also overlaid it on Ethereum. I, of course, study it myself as well. And for example, here you can see it a little bit more in detail. And you can see on this chart right here as well, this is the Bitcoin chart. Yeah, Bitcoin chart. You can see here, basically from the last 4 meetings, 3 of them were basically green here, and 1 of them has been red, and that was, of course, the last meeting. So yeah, that is the expectation for, that is the previous price action for Bitcoin. Then looking at Ethereum, for the last 3 meetings, it has actually been green here. So that is, of course, super, super exciting. And if we're looking at Bitcoin right now in the imminent short term, we can start to see the volatility is coiling up ever so slightly. But ultimately, I mean, if you've been watching the channel, if you've been following the channel, you're already highly alert on what this entire structure has been on Bitcoin. Because yeah, I mean, I cannot stress enough about it. I mean, I showed it also, for example, in the, let me quickly show you this here. I see that you guys don't see it right now. 1 second. Yeah, for example, in the Telegram group here, I have my my own section as well, where I give my updates. And of course, I showed it also on YouTube, but also in the private Telegram group here. I showed to everyone out there, like you can see on the top side. I took profits on my Bitcoin trade, and now I'm setting up new orders on $109,000 towards about $111,000. So, of course, I already showed my setup before we hit the target. Some people only show the trades whenever they're in profit, blah, blah, blah. But, of course, I share all my trading setups here on the channel. And, of course, I was predicting, of course, this liquidity grab on the lower side. And then, of course, on the channel, we were seeing clearly that momentum was clearly changing on Bitcoin, since we were creating, of course, lower low, deeper low, and then we were starting to create a higher low with, of course, this high right here, and we created this inverse head and shoulders pattern. So that was, of course, amazing. We saw it play out, and of course, ever since we had to break it towards the upside, we were talking about the bull flag pattern, of course, a pattern I discussed many times before on the channel as well. It broke out towards the upside, now it's retesting, so it would be ideal that we bounce back towards the upside. But of course, I have also said it many times before, we are right now heading in towards an FOMC. There are going to be a lot of unpredictable things happening, so this pattern can easily get invalidated. But let's say if we are going to get a correction on Bitcoin, let's say there's going to be massive volatility, and this is also what the traders in the VIP Telegram group also shared. You want to be taking advantage of this volatility. So, for example, Bitcoin comes back towards this $113,000 level. In my opinion, this is going to be a great level to be adding up to your positions. And it's not necessarily going to be a bearish move, in my opinion, if we come back towards this level, but it's rather going to be a bigger opportunity. So, if you also want to be staying up to date on these guys, up to date on all these trades, I would highly recommend to go to the link in today's video, in today's stream, guys, and join the private Telegram group here. I can also quickly link it in the chat and pin it over here because it's, of course, super valuable. We're sharing a lot of insights, and it's not only me who's sharing the insights, but also 5 other professional traders. So join that group if you want to be staying more up to date on all the developments. But basically right now for Bitcoin, and I've mentioned it also in my previous videos before, for the criteria for really Bitcoin to see this continuation higher, I just need to see a break of the most important and most critical level of resistance, and that is this region right here. If you also zoom out, it is not like, it's no rocket science what I'm doing here. Also with my trade, of course, I showed my entries, why I was entering, and it's no rocket science, to be very honest. And of course, I'm showing everyone I deposited 1 million in this account. Now there's sitting 2 million in it. I showed everyone that I think I can trade this account from $1 million to $10 million, and it will show everything on the channel. So it's no rocket science, but basically what we saw, of course, is that this is the most important resistance / support, and it's going to be continued to be that way here, in my opinion. So if Bitcoin can break above it, we're just going to be seeing a continuation towards the highs. If we are going to be struggling to break above it and we see a rejection, we could be moving lower towards the previous level of resistance, aka this level of $113,000, which in my opinion is going to be the most critical support for Bitcoin. And give me a second. This is, of course, going to be the ultimate opportunity if we are going to be seeing any corrections in this FOMC here. This is going to be the level where I want to be looking at, because I believe the structure where we're currently trading in is clearly a bullish bias structure, clear reversal structure. And if we right now come back towards this level, it is going to be a great opportunity to add on towards big positions. So that is personally what I'm also looking at myself. Of course, I'm going to be staying adaptive during the stream. Maybe I'm even going to be opening up a trade, because I've got about $200,000 left to trade with in my account currently. So if I do see a big correction coming in here, I am for sure going to be potentially even open up an additional trade on today's live stream. So that is, of course, going to be exciting. I want to be sharing my trades. I want to be sharing this with you guys out there, and I prefer to do it live, but usually these opportunities don't necessarily come live because, yeah, honestly, trading is not about just training for a live stream or whatever. No, the opportunity really has to come to you, and you shouldn't chase the opportunity yourself. So in 5 minutes, we are going to get the data from the Federal Reserve interest rate decision. Like I said, it's most likely going to be a deduction by 25 basis points, but for sure it's going to cause a little bit of volatility. Then also I want to be mentioning the fact that currently, if I'm looking at the M2 global money supply, which is also this chart overlaid on Bitcoin right here, you can see that the M2 global money supply is increasing right now. And in today's stream, or speech, I should say, from Jerome Powell, but we're going to be watching it all together in today's live stream as well, we're going to also see Jerome Powell probably talk about quantitative easing. And that's basically the Federal Reserve increasing their balance sheet. What that basically means, for to explain it real quickly, is that they're basically going to be buying up more government bonds, aka basically creating more money. And of course, if more money gets created, there's going to be one thing happening, and it's Bitcoin is going up here. And now what we're seeing here in the M2 global money supply is that there's a big divergence between Bitcoin and the money supply here. And yeah, of course, the money supply is sitting at all-time highs. Bitcoin is still lagging behind, but ultimately, Bitcoin is going to play a catch-up game right here. So super excited. And yeah, like I stated, I think it's going to be quite inevitable that this catch-up is going to be happening. And before I continue in the stream here, I also want to be mentioning the fact that if anyone is interested in trading, I believe that Weex is the best exchange out there to trade on. I've been trading on this exchange for quite a while right now here, and there's right now an insane deposit bonus that if you deposit anything, they're going to be matching your deposit with 20% bonus. So let's say you deposit $1,000, they're going to give you a free $200 in bonus money where you can trade with, and it's only valid using that first link in today's video description. So make sure to check it out. Highly, highly recommend it. So it is going to be happening in 3 minutes, the interest rate decision. But after that, we have 30 minutes left before the speech is going to start with Jerome Powell. But I have some very important charts I want to be talking about, because I want to be talking about altcoin season. I want to be talking about altcoins. I want to be talking about some very crazy setups I'm currently seeing in the market, because truly I believe there is life-changing wealth going to be made here. And I'm seeing that Ethereum is bouncing also, but I'm going to be watching, before going into that, the Bitcoin chart ever so slightly on the imminent short term, because I believe big volatility is about to be happening, at least like ever so slight volatility in the upcoming 2 minutes. I'm going to keep you guys up to date on what the interest rate decision exactly is going to be. But yeah, it's going to be most likely 25 basis points. So yeah, I'm going to keep you guys up to date. But after this decision will come out, I want to be going more in depth about Ethereum, altcoins, etc., etc. Because yeah, I'm going to give you guys some hints here, but there is some liquidity building up on Ethereum on the lower side. And honestly, I'm not necessarily hoping it's going to get filled up here. But honestly, I am taking this very seriously. There is a lot of liquidity laying on Ethereum on the lower side. And yeah, I'm just always paying closely attention towards it. And if I'm looking at Bitcoin, for example, yeah, you can see that the majority of the liquidity is actually laying above this. So there's a little bit of a divergence playing out over there. But let's see how it is going to be playing out. So I'm going to get my my phone real quickly here to stay highly up to date on what the decision is exactly going to be here. Bitcoin is coiling up ever so slightly right now. And we're going to get the decision in 30 seconds for you, because the stream is usually like 1 minute behind. You probably already know it. But for me, recording this, doing this live stream right now live, it is still about 20 seconds out here. So yeah, let me quickly check it, what it is going to be here. 10 seconds out. Boom, boom, boom. And guys, by the way, in the meantime, don't forget to slap up the like button on today's video. That will be highly appreciated. So if you can slap it up towards 1,000 likes, it will be highly appreciated. It's 10 p.m. at my place right now. So yeah, it's 25 basis points. So confirmed, we got a 25 basis point rate cut. Like I said, nothing like we didn't already expect it. And yeah, the market is just flip-flopping up and down. Nothing really special happens. But 25 basis points is the rate cut. So rates are getting lowered right now. That is very interesting. And of course, I think the dot plot gets released in 30 minutes at the start of the speech. So that is, of course, something to look out for. And I'm going to keep you guys up to date on what is going to be happening over there. But Bitcoin is creating some moves right now here. Ethereum is nothing, yeah, is actually coming down. But Bitcoin is starting to be pushing up ever so slightly right here. So that's, of course, absolutely amazing. That is absolutely amazing. I'm quickly checking if something big happened. Oh, I think the dot plot is already out. So I'm quickly going to check if this is possible to already check. Oh, yeah. Right now, I'm getting the news out here. And basically, a few members were actually in favor of doing a bigger rate cut, 50 basis point rate cut. So that's pretty interesting. Oh, so yeah, we got the dot plot out here, and this is the breaking news. This is the breaking news, guys. I'm going to give it to you right now. I'm quickly, boom. So the breaking news we're getting right now, and I'm going to quickly show you this. The breaking news, I want to show the tweets to show you this. The breaking news we have is that the Federal Reserve, this is from the dot plot. So this is basically what the members of the Federal Reserve are projecting is going to be happening in the coming year, and basically the outlook for the coming period. And their outlook is right now that we're going to get 50 basis points more rate cuts. So this basically means that we're going to get another 2 rate cuts this year. So that is very good news here, because before it was quite uncertain if we were going to get this. And now it looks like this is going to get to 100% here. So of course, this is going to get updated in the upcoming period. And it looks like that at the end of 2025, we're going to sit at 3.5% on interest rates. So that is the big news here that dropped out. The market is not really doing anything special, but obviously this was already expected, like I showed in the beginning of the stream here. And if you just tuned in, I would just recommend to check out the beginning of the stream, because there I explained what kind of a projection we should be having and what kind of a prediction we should be having for today's stream here. Because all in all, not a lot of big volatility is expected. So now this is all out of the way, I quickly want to be running in towards basically the projection of altcoin season, the projection of, like, is Ethereum going to create another run? Bitcoin remains to be stable. Is Bitcoin going to create another run? We already discussed it. I believe that Bitcoin is going... Oh, let me first finish actually my Bitcoin predictions. Because Bitcoin, I believe, is going to create another run. But, here's the big but. I don't think it's going to be lasting so much longer. And this is something I've been saying for such a long time already. I've been stating that, yes, this Bitcoin run is going to still come here. But whenever we're at the end stage of this halving cycle indicator, we are going to be most likely top out here. Because this is what happened in the 2021 bull market. This was what happened in the 2017 bull market. And most likely this is going to be what is going to be happening in the 2025 bull market. So we still have about 5 weeks left here. Still about 5 weeks left here. Nothing to worry about at all. And in my prediction, we're going to be moving to $137,000. And that is ultimately where I just want to be taking some more profits off the table. So let me quickly check this. I've got here the full dot plot, and I want to be quickly showing you this to you guys out there. So I just posted it. on Twitter. So I want to be showing you this. So this is the full dot plot for basically the outlook for the coming period. Yeah, this is the complete. Let me see if I can refresh it on this chart, so it's going to be even a little bit more clear. No, it's not refreshed yet. So this is the dot plot, and this is where I talked about in the stream earlier. So basically, all the members from the Federal Reserve will put in their predictions and basically say, okay, this is where I think the rates are going to be moving towards in 2025, in 2026, etc., etc. And now the consensus is, and of course, we get this dot plot every 3 months, and it changes up quite a lot here. But now the consensus is, because this is the last one before December. December is the next one, the next dot plot. So this is the last one basically for the 2025 meetings. So basically the prediction and the forecast is from most Federal Reserve members is that the interest rate is going to go to about 3.5 to about 3.75. So that is very great because we have that prediction from these Federal Reserve members already. That is what they're aiming for. We are going to get more rate cuts. And that is, of course, already why the probabilities are going to be dropping lower and lower in the upcoming period, of course. So, yeah, that is, of course, super good. And that is one of the reasons why we are getting some volatility in the market. It isn't that very crazy volatility because, yeah, the real volatility is going to be happening whenever we're going to get that meeting. So, very, very exciting. And let me quickly continue with Bitcoin, because I said I think Bitcoin is going to be topping out around $137,000. Why? Because first of all, I made this prediction, $137,000 on the bear market bottom on Bitcoin. And I personally want to be sticking with my predictions I make at the bottom and not whenever I get euphoric. That is one of the rules I have of trading. And I've been trading this market for over 9 years now. And just around that $137,000 level, a little bit lower already, I will scale aggressively out of my long positions and will even scale in towards short positions. So this is, of course, quite controversial because people don't like to hear, oh, the bull market is over, whatever. It's not a state that like people like to hear, because people like to hear Bitcoin only goes up. But unfortunately, that is not going to be the case here. There's going to be a bear market where some people are going to get wrecked here, etc., etc. Ultimately, I'm a long-term believer in Bitcoin. I think it's going to go to millions. But of course, I am also a trader and I want to be taking advantage of both directions in the market. So that is why I'm going to be doing this. And yeah, if you just want to be staying up to date on all these setups, on all my upcoming trades, I would just highly recommend for everyone out there to join the Telegram group here. It's in the second link in today's video description or in the pinned comment, in the pinned chat, in the pinned live chat. You can join it. It is super valuable. There's a lot of alpha being dropped over there. And most importantly, there's a lot of profit also being made over there. Because if I quickly show you this, if I could just go through the profits here. So many people are making profits. Just someone just posted another trade. Amazing. If I just keep on scrolling, people are making so much profit. And like I said, it's not only me that is giving my setups and my ideas of the market and what I think of the market. It is also 5 other professional traders that are constantly sharing trading setups on multiple altcoins. They're also giving insights about what they think about the market, what they think about the Fomc. So I would just highly recommend to join it. It's super, super good. So Bitcoin, in my opinion, is then going to top out in about 6 weeks. And what we have also learned from previous cycles is that altcoins always top out later than Bitcoin. That is what always happened in previous cycles. So you have first Bitcoin that tops out, then altcoins. And also, by the way, one thing, I don't want to be the bear, blah, blah, blah. I don't want to be it. But of course, if I'm looking at Bitcoin, we're creating a major bearish divergence, lower highs on the RSI, higher highs on the price action. So a thing to pay attention towards. Everything is looking good, but there's probably going to be a bigger correction. So I just want to be mentioning that fact that most likely is going to come at a certain point here. But going further in towards the content, because in 20 minutes, we already going to be having the speech of Jerome Powell. Looking at Ethereum, honestly, I think Ethereum is going to create a major run higher. Because some people think like, oh, you don't think the market is going to run higher? Yes, I think the market is going to run higher because I'm in about $20 million in long positions right now on Bitcoin and Ethereum. And you have to understand, Ethereum is right now sitting at all-time highs. Literally, it's trading around all-time highs. And let me check this. Yeah, it's trading literally around all-time highs. And while it is doing so, it is creating a major symmetrical triangle. And whenever this is going to get broken out, it is going to cause a massive breakout. Because looking at the daily time frame, guys, or better the weekly maybe even, you can see, this is not the right chart, by the way. But looking at the daily time frame, you can just see a major compression, and this is trading at the all-time highs. And whenever this compression is going to be breaking out, we're just going to be seeing a tremendous move on Ethereum. And yeah, personally, my price targets on Ethereum, I think it's going to be running all the way up towards 6,500. So that is quite another exponential run higher. And that is where I have my take profit set up mainly. I will be locking in some profits along the way up, obviously. But my major $10 million quantity trade on Ethereum, $2 million trade on Ethereum is basically going to, I will basically take my profits on that trade around 6,000 to about 6,500. So that is where my price target is laying for Ethereum. And I do think whenever we're going to be clearing this resistance on the top side, it is obviously going to be happening. And looking also on the weekly time frame, you can just clearly see we're compressing towards the all-time high. It's more than likely to see some resistance. But yeah, the moment we're going to be breaking above this resistance, we are obviously going to be seeing a big squeeze here. And also what is very interesting is that now Bitcoin is, of course, Ethereum is lagging behind Bitcoin. But there's going to become a moment that Ethereum is going to be overtaking this momentum again here. And it usually, I say usually, but it always happens at the end stage of the bull market. And what have we seen Ethereum do? Be freaking strong. And that is, of course, exactly what always happens at the end of the bull market. Sorry. And to make you even more exciting, I have this chart here from Trader.pa, and this is the others chart. So all other altcoins except Bitcoin ETH. All other altcoins except the top 10. And this is basically what shows you whenever altcoin season starts here. And look how similar the 2019-20 cycle is compared to this cycle. It is bloody insane. It's bloody insane. So previously around, we got the bear market low. We moved towards the upside. We moved lower. And of course, we consolidated before the expansion. And of course, we broke above the Bollinger Bands. And we saw that expansion phase here, right, for a couple months. If we're looking now at this cycle, bear market low, create a high, come down, create another high, come below it, break above the EMA ribbon. And now this is the point where the big expansion starts here. So it looks so similar towards 2020. It is absolutely insane here. It blows my mind here. And if you look here at the total tree chart, for example, also the entire altcoin market cap, entire crypto market cap, excluding Bitcoin and Ethereum, you can also see a major compression is just currently getting started. So I really believe a big run is on altcoins is going to get started. If you also look at the Bitcoin dominance, for example, and this is a chart I discussed so many times already, but yeah, it is just exactly happening like I've been predicting. And yeah, not I, but we have been predicting. So very interesting what is happening over there. Also quickly want to be discussing some more things about the FOMC before diving further, because here you have the key decision takeaways. So first of all, the Federal Reserve delivered its first rate cut of 2025, and we lowered it by 25 basis points. Second of all, big point, is that the projection is signaling that we're going to get 50 basis points of rate cuts more this year. So that's what we expected, and of course what we discussed earlier. We're going to get 50 basis points more rate cuts. Then the number 3 big thing here is Governor Miron DeSantis is pushing for a 50 basis point rate cut today, but of course didn't make it because it was 25. Then also point number 4, the Federal Reserve is warning downside risk to employment is growing. That the downside risk of unemployment is growing. So yeah, they're expecting more unemployment basically. And that is basically once again a signal that the economy is weakening. And that, of course, could lead towards a major recession. So, once again, something very important to understand. Then, fifth very important point is that 6 officials are expecting no further rate cuts in 2025. Well, the most of the people are predicting a 50 basis point rate cut later in this year. Then point number 6, 9 officials are forecasting 2 more rate cuts before the end of the year. So, of course, some members of the Federal Reserve are not completely agreeing with each other, but that is, of course, completely fine here. Then Bitcoin is now taking a little bit of a hit here. It's taking a slight little dive towards the downside. But, of course, all in all, I'm truly not worried about it. And, of course, like I said in the beginning of this video, if we truly are going to come back towards this level right here, the $113,000, which is, in my opinion, the golden zone here where I want to be scaling in more aggressively into new trades. That would be, of course, absolutely amazing if that's going to be happening. But ultimately, what I said also in the beginning of the video, any move we're going to be creating right now is not necessarily going to be a clear direction for Bitcoin. It's not really going to be mattering all too much here, because usually we don't get all too much volatility on the day itself, but more in the weeks and days after. So, guys, before I go further in towards this amazing stream here, we're definitely not done here. It's going to be long. It's going to be a long night because we're going to be watching the Jerome Powell speech as well here. But I quickly want to be asking you a favor, and that is to slap up that like button. And if you haven't already, subscribe to the channel. It will be highly appreciated. It will be very, very highly appreciated. So subscribe to the channel and slap up that like button. Can we smash it up towards 1,000 likes? That would be freaking amazing if we can do it on today's stream. By the way, Bitcoin is getting bought up completely again here. Like nothing happened. So that is, of course, very exciting. That is, of course, very great here. But literally, Bitcoin is getting bought up very quickly again here. So all in all, I shouldn't be worried about the price action. And this is why you shouldn't be in these high leverage trades here. That is why I am not a scalper. I'm not afraid to get liquidated right now on this event, because I know the volatility is not going to be so crazy. So yeah, be careful if you're taking like these very tight stop losses on such events, because usually you're going to get wrecked. Usually you get wrecked. And let me also quickly check on the chat, guys. It's a big dump or a short dump, guys. Like I said earlier, this is nothing to worry about, because the big volatility usually comes during the speech, and it's not even big volatility because the real volatility comes in the days after. Big dump is coming, G. Let's see. Let's see. I remain to be long. I believe in my personal analysis. I think, yes, a dump back to $113,000 is definitely a possibility. But all in all, it wouldn't change the structure of this market, because we are like literally that level what I'm mentioning. If Bitcoin comes down towards $113,000, it is truly going to be a massive gift here. And I'm going to even scale towards probably another big position on Bitcoin, because if we come back towards this level, we're ultimately going to create an even bigger bullish structure. Like, for example, Bitcoin comes back towards this level. And what I think is most likely we're going to be holding up towards this level, since there's a lot of previous resistance, literally very hard to clear. There's a lot of buyers going to be around this level. We bounce back higher, and this is literally boom, boom, boom. And then we create this major inverse and shoulders pattern, and we're just going to be blowing higher towards new all-time highs. So ultimately, if we come back towards $113,000, $112K, it is going to be only a reason to accelerate and even open up bigger trades for me here. So it's not going to be something I'm going to be afraid of. And of course, I already in my trades. So if we right now move higher, I am blessed. It is great, but it is not necessarily I should be afraid of if it happens, because ultimately a dump is usually a gift, in my opinion. So if you want to be trading these moves, not only with me, guys, but like I said earlier, there is right now an insane 20% bonus available if you sign up an account using that first link in today's video's live stream to WeX. Like anything you deposit on the exchange, that is also the exchange I'm trading on. My favorite exchange. It's really reliable. It is, by the way, also the cheapest exchange out there, because if you use the first link in today's video description to sign up, you'll get a 25% fee rebate, making it literally the cheapest exchange out there. So that is insane. And on top of that, like if you deposit $10,000, you will get a free $2,000 because they're right now matching 20% of your deposits on WeX. So insane. And by the way, there's also a free Apple Watch you can win here by joining the Telegram group here. So yeah, check it out also. So there are many giveaways, there are many great offers right now available up for the grabs. So guys, please don't spam, because now I am going to mute you if you spam. If you don't spam, I will look at your request. So, okay, guys. We have got about 10 minutes left before the FOMC starts. And I quickly want to know which altcoin should I look into. Because I think I have time to look in 2 or 3 altcoins. Let me know which one should I look into. And if you spam, by the way, you don't get it. I already gave my thoughts about ETH. So I'm not going to be doing a big deep dive into towards that right now. Sorry. Yeah, Plume. Plume has been doing very great. Quickly going to be looking at Plume. I'm also a big holder of it. I hold about like $300,000 in this coin. So that is, of course, absolutely amazing. To see this do well here is basically a layer 1 project. And yeah, it has been creating this bottom structure. I looked at it. I've been holding it for quite a while here. I bought it first over here. Boom. And now, of course, this W structure. So looking good here. Nothing more to really talk about. Let's see what you guys are saying. Arbitrum. I see someone saying Arbitrum in the chat. Arbitrum, definitely one of my more favorable setups. This is a setup I've been looking at myself personally. So basically what you see, I prefer to look at even on this on the weekly time frame. So if you look at Arbitrum, I can pick up the RSI. Oh, sorry. I can quickly open up the RSI. So Arbitrum is one of the favorable setups I'm currently looking at. It's a layer 2. Layer 2 tends to perform very well during periods that Ethereum performs very well. So I think it is going to be doing very well. So you can see here on the RSI, we create a higher low, lower high in the chart. So we created this this bullish divergence on the weekly. So this is already looking good. Then we reclaimed this low on the market that previously here flipped into resistance. Now it is retesting as support. This is a very good setup, in my opinion. Very good setup. Very, very good. Especially on how the market is looking on the total tree, on basically the entire altcoin market cap. Everything looks like it is going to go boom here. And if you then find these setups on Arbitrum, I think it's a very great setup. I think it's looking very, very good. Let's see what you guys are else saying. Brett. Yeah, Brett was one of the coins. I think it's down bad here. It's a meme coin. Yeah, it's down bad here. I was at this coin on 0.002 here. So still like a 20x from here. And I ran this all the way up towards the top side. So that was quite insane. I offloaded most of it on 21 cents. But yeah, Brett is basically creating a big compression. I think it could be doing still very well. You can see clearly it's creating a compression pattern. And I just should be looking at this pattern, which direction breaks it towards. That is, of course, going to be critical. But also, if you're looking at Brett, you can see clearly this is a very important level of resistance. If we break above this high, we're most likely going to see a continuation. Otherwise, it's just going to be a dead cat bounce. If we, let's say, break out of the range, get rejected by here, it's most likely going to be a dead cat bounce. And this is going to be bleeding dead. So that's basically my opinion on Brett. I'm going to go through everything very quickly on all the requests, because we don't have a lot of time left here before the stream of the speech of Jerome Powell starts. World coin. Yeah, World coin. So also with World coin, I can see it already. We're creating a major bullish divergence. So this is amazing. So you're creating this lower low right here. Oh, it's not a bullish divergence. I was expecting to see bullish divergence. So it's not creating a bullish divergence. So that is, of course, less favorable. But the problem with WorldCoin is that there's a lot of inflation. But it can still do very well because there are good founders behind it. And this is just the critical level to break here. So this is, of course, major resistance. If we break above it, it's going to be doing well here. I still hold it on my ledger. I've been holding it for quite a while here. I've bought some into this 25, so I'm not exactly sure what price there, but somewhere over here I bought it. But let's see where it's going to go towards. If it can break above this level, it can see for sure a big continuation. And please don't spam in the chat, guys, because if you spam, you will get a timeout. And of course, that is what no one wants. No one wants a timeout, right? Ondo, I see someone talk about Ondo. Ondo is one of my favorite projects. First of all, because of the fundamentals. They have very great fundamentals. That is what I personally really like about it. And if you look at the weekly, structure is looking very strong. It is constantly gaining momentum, like you can see here, gaining momentum towards the upside on the weekly. And if you're then also looking at just major levels of resistance, I can clearly identify this as a critical zone here. This is where clearly the majority of the resistance is found here on the finance. And if we can break above the level, that is going to be the key point where we're going to be seeing a continuation, because you see here, boom, resistance, 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 resistance. If we break above that level, that is just going to be marking the beginning of a big continuation higher. So that is, of course, going to be very, very critical. Bitcoin, by the way, creeping back towards the upside. And in 4 minutes, the meeting of Jerome Powell is also going to get started. So interesting, we can see, of course, this upper support line is basically getting compressed here. So a breakout seems inevitable. It's going to be a matter of time. And like I said earlier, since the entire market is coiling up here, it makes a lot of sense to see this push up higher as well. Then we see a request from Shiba. Thank you for the donation, by the way. It's highly appreciated. I mean, you shouldn't donate. I don't need it, but it's very appreciated. But here we can see Shiba. Basically, this is the accumulation zone. This is where basically, like you can see also over here, this is a period where it is very boring. Boring. But ultimately, these are the zones where it is great to accumulate, right? Great to accumulate in this zone. And I remain to see this as a similar level. It can still drop lower, for sure. But these are levels where you want to be accumulating. So if it also comes down again here, back towards these levels, it's going to be an even better buy. It's not the best buy right now here, but it looks quite interesting. But ultimately, Shiba is not really, it's of course dependent of the market, and it's of course very much dependent on if there's a lot of interest in meme coins and altcoins in general. So yeah, it's going to be depending on the entire market. And for example, with Ondo, it is also a great project, right? So it's a little bit different. So sorry, this was it for the altcoin requests right now. Maybe I just should do a stream full focused on altcoin requests, because I see there are a lot of requests. If you have more requests, guys, what I want to be doing is maybe make a group in the private Telegram group, which everyone can, of course, join. And in the private Telegram group, I can just make a channel where everyone can drop their requests, and I can just drop my analysis and my thesis on it, or just a quick voice memo. So if you find it interesting, make sure to join the private Telegram group. Let me know in the general chat. I speak with you guys out there as well all the time. And yeah, ping me on the general chat and let me know if I should do that, because yeah, then we can definitely do it. So make sure to join the VIP group. You can find it in the live chat and or in the description of today's video, private group. And yeah, then we can discuss it over there for sure. But anyways, guys, the FOMC is now getting started. It is now getting started any moment right now. And I'm quickly going to make sure the sound is okay and you will hear it. So the FOMC is about to start literally in 1 minute. So we're going to be watching it all together. It's going to be freaking exciting. It's going to be exciting. I will change my my view so you guys can see the chart as well in the background. So give me 1 second. I first want to check if the sound is okay. We're going to be watching the FOMC all together right now. Starts literally in 1 minute. So in this speech, Jerome Powell will be obviously speaking for about, what is it, like 45 minutes. And usually we get a lot of volatility during the stream. It's going to be exciting. So in the meantime, slap up that like button. It will be amazing. I see we are sitting on 650 likes. I think we can easily smash it up to about, what is it? We can smash it up to 1K. I think so. Easy. Oh. Oh. Starts. Let me check if the sound is okay. Hit the play button. Yeah, I know.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Question round right now.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is a place and needs to move quickly to a new place. That's not at all.
Oh no. Internet, please.
And see.
Okay. Hopefully it reloads. Let me check. Everything else is working. Don't know if it's from my side. I don't think so.
Yeah.
I think. Okay. I just heard from people that it's not just me, but it is just a stream from the FOMC that is lagging. So it's not my internet connection. It's from everyone because I see multiple issues getting reported. Some people are saying refresh it, but it's
in place. I guess I'm just, trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this next actually ticked up just.
very annoying. It's not my side, and it's from everyone. Quickly checking if it's better on YouTube. Don't think so, to be honest.
The risks of higher and more persistent inflation have probably become a little less, and that's partly because the labor market has softened,
It's the Fed,
GDP growth has
website that
slowed,
is not working so good.
and so I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address. How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up, every year since 2015, the SEP has forecast that you would hit your target 2 years later, and this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what, let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just, everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having really a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
You know, I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. You know, how can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. You know, we want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two we're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve system and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots. And I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there's a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening, and that'll of course raise demand. lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well,
interesting question.
I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
You know, we're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, you know, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of, you know, running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, you know, we need to, you know, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But you know, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Well. That was it. The Federal Reserve speech. Let me move this. Well, that was it. The Federal Reserve speech. It wasn't so exciting. It wasn't like a lot of stuff did happen, to be very honest. Let me get it into the right formats. There wasn't a lot of stuff that truly happened. And yet again, like predicted, nothing happened. Because this is what I said in the beginning of the stream. The real volatility of the FOMC happens in the days after. This is what I said in the beginning of the stream. So, yes, there's not a lot happens, but usually in the days after, we tend to see a lot of volatility. So, that is, of course, already a take we already had before we started the stream. And I will continue to hold the same thought here. So, yeah, I do think... Yeah, no, it's correct. So, yeah, I do think it's going to be an exciting period that we're going to be going in towards. But today doesn't necessarily spike a lot of volatility on Bitcoin. And basically what I mentioned also, I mean, actually, we're still holding on towards the bullfrog pattern, looking still quite decent. Let me know what you guys thought of this Q&A and the speech of Jerome Powell. But yeah, it wasn't too exciting in my opinion. But basically, if we do come back towards this level, this is my golden zone here, where I do believe a big opportunity is laying here if we are going to come back towards this level. So you can see it on this chart. If we come back towards this level, we're retesting this high. We're basically going to form a bigger inverse and shoulders pattern. Big opportunity. So yeah, hoping Bitcoin comes back towards this level because it will give us a big opportunity. But if it doesn't, we already loaded our trades. And we're going to be flying anyways towards the upside. But anyways, guys, for me, it's quite late already on the evening. And I'm actually quite tired after the stream. So I'm going to be wrapping it up. I will stay in touch, guys. I will stay in touch with you guys in the private Telegram group. So make sure to join it in the second link into this video description. If you want to be looking for a reliable exchange, sign up an account to WeX. First link to this video description. They are giving a 25% fee rebate, making the cheapest exchange out there. But anyways, guys, I'm sorry that I'm wrapping up the stream, but I'm just so extremely tired that I just want to, go and take a nap, because in about 12 hours, maybe 14 hours, I'm uploading already a new dedicated video on the market as well. So this is it for me on today's update video. If you did live stream, if you did enjoyed it, subscribe to the channel, slap on that like button, would be highly appreciated. But anyways, it was super exciting, and I see you guys on the next one. Peace out.